This is Andrew Stotz of Stotz Investment Research, and today I'm looking at world-class benchmarking for the company Univentures Public Company Limited. First, let's get some background on the company. Univentures Public Company Limited is a property and investment company that develops and sells condominiums, as well as rents the space in owned office buildings. Its subsidiary, Thai Laisang, also engages in production of zinc oxide under the Zinco brand, which is used in the tire, paint, medicine, and cosmetic industry. The company's ticker code is a UV. Market cap is just about to touch $500 million US. Average daily volume, a pretty strong 3 million. Beta is 1.7, so it can be very volatile. And the company is in the real estate sector. Free float is about 28%. Let's look at what's happening in the company. What we can see is the sales of real estate projects accounts for the biggest part of the company's revenue, hence that's why it's in the real estate sector. And we can see UV has both high-rise and low-rise projects in its portfolio, such as recently launched U Cassette Nawamin Condo and Golden Neo Bangna Ginkao condos. And the rental and rendering of services business is conducted mainly through renting out space in its owned Park Venture Ecoplex, a high-end office building that has a great Dina DeLuca down in the basement or in the ground level, and other office properties such as Saturn Square via Golden Land Group, which is 39% owned by UV. Production and sale of zinc oxide is run by this 100% owned subsidiary, and we can see that zinc oxide is a chemical compound commonly used in tire, paint, medicine, and cosmetic industries. UV is 66% owned by Adelphos, a company owned by the second generation of the Siri Watana Pakdi family, which owns several property companies. The group is redefining its strategy for adapting products and pricing based on consumer behavior, especially in low-rise projects, which account for most of its revenues. So let's look at the revenue breakdown by segment and sales type for 2016. We can see that real estate accounts for 82% of revenue, rental another 8%, and therefore zinc is only 8%. We can see that also by real estate type, we can see that mainly it's coming from a low-rise condos. So now that we understand more about the company, let's look at its world-class benchmarking score. So first we want to look at the director of the company, and we can see that since 2007 to the present, the independent director is Pochani Tanawaranit. And what we can also see is that the president from 2013 to present, Worawat Sisaan, and therefore we can attribute most of the performance to Mr. Worawat. Now, profitable growth has improved to a 6 from a 9. As you remember, 10 is worst, 1 is best. It's ranked in the lower half of medium-sized real estate companies worldwide, and I look at 340 that I benchmark off of. The next thing I look at is profitability, which is really the weakness of the company. It's improved to a 6, so that's great. It's moved from a 9 to a 7 to a 6. Excellent progress, but still below average. And we can see that growth returned to a number 2 over the past 12 months, so excellent growth. Now, asset utilization drove profitability as profit margin was ranked at an 8, so profit margin is clearly the area to focus. Sales growth has fallen. Sales growth has fallen to a number 4, while margin change improved 1 step to a number 4 also. So making good progress in sales growth and margin change, but a long way to go to improve the margin of the business. Overall, slightly below average performance for this company, but improving over time. You want to see more? Well, just sign up for our free newsletter and get access to more investment knowledge at becomeabetterinvestor.net/join, and I'll see you there.